Welcome back to the second part of Business Africa. 2020 has started slow for Sub-Saharan Africa. The economic growth of the region is in decline according to the forecast by the World Bank. In its latest World Economic Outlook report, the organization announced a decline in economic growth to 2.9% compared to the 3.2% previously announced. Saj Kofi and Freedom Lemo report. Bad news for the Sub-Saharan Africa economies, especially whose economic prospects are already on a downward curve for the year 2020. According to the latest World Bank report, economic growth in Sub-Saharan Africa is expected to be only 2.9%. This is a sharp decline from October 29 forecast of 3.1% regional economic growth this year. A situation caused, according to the financial organization, by weak external demand coupled with increased global policy uncertainty, falling commodity prices and internal vulnerabilities in several countries. And factors such as improved investor confidence, a recovery in oil production and a robust growth in many agricultural exporters will not help reduce the continent's very high poverty level of 56%. The report projects per capita income growth of 0.3% in 2020 and around 0.7% in 2021 to 2022, the lowest level in the world. Nigerian authorities have introduced a new bill considered to be a life-saving measure. The bill increases government revenue through an increase in value-added tax and a reduction in taxes. This is a policy that will increase tax revenue as part of efforts to diversify its economy to reduce its dependence on crude oil trade. Cedric Siosolo and Michael Dibia report.
Nigerians to move the country to the next level.
Nigerian President Muhammadu Buhari has signed into law a new finance bill that seeks to boost government revenue and encourage small businesses in Africa's biggest economy. The legislation passed by both chambers of the National Assembly last year raises the country's value-added tax rate from 5% to 7.5%. The finance bill includes provision that will ease burdens on insurance, banking and oil industries. According to an analyst, it is expected to bring about a significant increase in investment and stimulate activities in the capital market. The bill exempts businesses with less than $70,000 in annual turnover from corporate income tax, while lowering the tax rate for companies making up to $280,000 from 30% to 20%. The law will also provide incentive for investment in Nigeria's capital markets and exclude some small businesses from corporate income tax while easing the burden on medium-sized companies. An economist says the bill shows that Buhari's administration wants to increase revenue and support and grow local businesses.
We've come to the end of this edition of Business Africa. Thank you. You can also follow us on our pages Africanews and Africanews FR for the French language. Goodbye.